From 2024, platforms like eBay, Vinted, Etsy, and Airbnb are now required to report seller data directly to HMRC. So if you're selling goods or services online, even on the side, it's time to make sure you understand your tax responsibilities. This applies whether your sales are just a bit of extra income, a side hustle, or your main way of earning a living. Even casual selling could mean you need to report income and possibly pay tax. For example, you might be reselling items, making crafts, offering tutoring, delivering food, walking dogs, hiring out equipment, or creating content just like this on YouTube. And of course, it also covers property income like letting a holiday home, running a bed and breakfast, or even renting out a parking space. Since the 1st of January 2024, these platforms have been collecting and reporting seller information. The first reports, which covered January to December 2024, went to HMRC in January this year. Therefore, any income would need to be included in the tax returns due to be filed by the 31st of January 2026. And the same thing is happening this year, so now's the time to get ahead. Now, they don't report every single seller. The rules kick in if you've made 30 or more sales in a year, or if your earnings go above £1,740. The platforms will also send you a copy of the information they report, which is really handy when it comes to filing a tax return. There's no hiding from HMRC either, as they are also starting to use AI to get a full digital picture of individuals trading online. So what does that mean for you? If you're earning money online, you may need to register with HMRC as self-employed. That's something you can do online fairly easily, but it's important you don't ignore it, because failing to register could mean fines or penalties later on. It's important you know what your sales are before the online platforms send their reports to HMRC. If your total sales are under £1,000 in a tax year, you don't need to register with HMRC. That's because of the trading allowance. But once your sales go over £1,000, you'll need to register as self-employed and declare the income through self-assessment. Now, when you calculate your profits, you have two options. You can either deduct your actual business expenses, or you can use the £1,000 trading allowance instead. This allowance can simplify things, but it isn't always the best option, especially if your real expenses are higher than £1,000. So it's important to check which method leaves you with the lower taxable profit. Therefore, the next step is keeping good records. That means keeping track of your sales, but also your costs. Now, many people make the mistake of only thinking about what they earn, but the reality is that your tax bill is based on your profit, not your total sales. So, if you're organised with your records, you can make sure you only pay what you owe and nothing more. One of the easiest ways to stay on top of this is by using bookkeeping software like Xero. You can link your bank account, upload receipts, and track income and expenses as they happen. I'll be covering this more in an upcoming video. By using bookkeeping software like Xero, you're not leaving everything till the end of the year. Your records stay up to date, and when it's time to complete your self-assessment, you already have a clear picture of your earnings and costs. Now, let's talk about something that can save you money: allowable costs. These are the expenses you're permitted to deduct from your income to reduce your taxable profit. For example, if you're selling items online, you can deduct the cost of buying stock, packaging, postage, and platform fees. If you're creating digital content, you might be able to deduct equipment like cameras and editing software. And if you're letting property, costs like repairs, insurance, cleaning, and legal fees may all be claimable. The key here is to keep clear records and make sure your costs are genuinely related to your business activity. So to recap, digital platforms are now reporting your sales and income directly to HMRC. If you're earning money online, you may need to register as self-employed, keep detailed records, use a system like Xero to stay organised, and make sure you're claiming all the allowable costs you're entitled to. That way you can stay compliant, avoid any nasty surprises, and don't pay more tax than you need to. In my next video, I'll be walking you through the basics of bookkeeping using Xero. Be sure to like and subscribe if you want more clear and practical tax and business updates.